won't stop till I hear him say,
Warning: the information that we convey in these videos and the content on this page simply provides general consumer information. It is not legal advice or regulatory guidance. It is not intended to sway your personal bias in any way. We are simply just relaying information already available to the general public. We highly suggest you do your own research and draft your own opinion on the topics disclosed in this video breakdown. Without further ado, sit back, relax, enjoy this video breakdown, and if you're not already subscribed to the YouTube channel, consider doing so now. Alrighty, what is going on, CYPRX advanced YouTubers? Ladies and gentlemen, I hope that everybody had an amazing weekend. Today is Monday, so we're going to do a technical analysis wrap up for the month of September. Some very interesting price targets and evaluations that we had posted to you all way ahead of time on Twitter. We're going to give you guys our overall analysis on XRP. We're going to go over gold. We're also going to go over GBP/JPY. So go ahead and smash that thumbs up button if you like deep technical analysis breakdowns like this. It does help boost the YouTube algorithm, and we really do appreciate it here at CYPRX. Now, this month was very, very interesting via price action. We had a lot of volatility in the market for the month of September. We had a lot of bullish moon boys hopes and dreams get crushed via the little tiny pump that we had on XRP, which we're going to cover here in just a second. I'm going to give you guys price predictions and updates. We're going to go over XRP last. So I will leave timestamps down in the description below for anybody who doesn't trade gold or anybody that doesn't trade forex. You guys can just go ahead and skip to the cryptocurrency part of this video. All right. But we're going to start today on gold. We're going to go back on my Twitter. Again, if you don't follow me on Twitter, the best way to do so is to copy the link in the description down below and then post that in your internet browser to find us on Twitter, mainly because we are shadow banned. I know it's a hassle to do that, ladies and gentlemen, but if you want some of these call outs that we put out well in advance, that is the best way to follow us on Twitter. So I said to you guys, this was way back in June. I'd been mentioning to you all that gold was most likely going to tank based off of the DXY strength. Now, remember, 7 years in this market, we have lots of insider information here at CYPRX. And also via the technical analysis that we teach is very logical and easily understandable based off of liquidity in the market. And that's something that we're going to pay extreme and close attention to today is retail money that rests in this market. Remember, these major banking institutional elites, okay, they do not trade off of a trading view subscription with their Fibonacci's and their indicators and their support resistance trend line methodologies. They don't trade with any of that. They trade with time efficiency in the market, and they trade with price evaluation in the form of premium or discount. Okay. So with that being said, we're going to go into gold first. Like I said, I'll leave timestamps in the description below for anybody that wants to skip this, but anybody that is invested in gold, this is definitely something very intuitive to pay close attention to. So I said to you guys on June 15th, all right, way ahead of the curve, gold breaking, this is all planned, save this tweet, and I had sent you all a screenshot saying that gold could go as low as $1,500 per ounce. You guys can see down here, this blue line roughly comes in at around $1,500. Personally, that's the lowest I believe gold could go. It could go lower. We don't know, right? Black swan event, something crazy happening, United States dollar strength picking up, who knows, right? But in my personal opinion, this $1,500 marker, maybe even at the top of 1,400, is the lowest that gold could potentially go. So I sent you guys this screenshot showing you all that there was trend line liquidity here in this area. You all know, if you've been following this YouTube for quite some time, that we trade against retail methodologies. So with that being said, when I sent you all this screenshot, you could see this nasty trend line on the weekly chart. You guys can see 1 week, this is the weekly chart on gold, cooking up here beneath these lows. Now, with that being said, that gave my analysis for the market to temporarily flip to the downside to collect up all these orders in the form of over-leveraged buyers beneath these lows who are trading trend line methodologies, which is what 90% of individuals on YouTube are teaching, or all these mentors that charge you thousands of dollars are teaching, right? Well, guess what? 90% of individuals lose, and I'm going to show you exactly why. That is because they trade these methodologies, they draw imaginary lines on their charts that don't actually exist, and the market makers, that people that are actually control of the money in this market, they know that. And so they come and they attack those areas, and then they make their move. Remember, I told you guys this is all manipulated and planned. Okay. And so if we go over on gold now, all right, you guys can see how that played out. So this is where I put that tweet out to you guys. You guys can see gold breaking. This is all planned. Save this tweet. All right. And we are on, let's go to the weekly chart real fast, just so that way you guys can see where I tweeted this out to you all right when price was hitting that triple touch of this trend line. Okay. Right down here at the top, you guys can see June 15th when I tweeted this out to you all, and the market tanked and has now since collected all of those orders underneath of these lows. You guys can see the blue line that I also had on my chart roughly at around 1500. You guys can see that displayed here, and you guys can see how far away price action is now. So hopefully back in June, I was saving people's portfolio when major investors on the internet and the YouTube space were telling people to buy gold, right? It is not time to buy gold when price is at a high, all right? You want to do your technical analysis properly. Here at CYPRX, we provide that knowledge on how to understand the charts properly when it is time to buy. Right now, personally, I am in accumulation mode on gold. Any price underneath $1,650 on gold, I personally buy gold. Okay. Now, I'm not just going to sit here and advertise an affiliate link for Glint or anything like that. But Glint is personally the platform that I choose to buy my gold on. You guys can go do your own personal intuitive research on what company that is. Okay. I know that a lot of people offer affiliate links. However, I'm not here to collect any type of affiliation money from you guys. All right. So going over into the extreme technical analysis breakdown for the month of September. All right. Again, remember insider alerts. I try to give you guys updates. I'm not going to sit here and disclose to you guys how we get our insider information. However, if you guys have been following us on YouTube for quite some time, you guys can see that we are pretty, let's say, about 90% accurate with our callouts. Now, 100% accuracy is not realistic, and I'm not going to sit here and preach like we are 100% accurate, but we are very logical with our price predictions. And for the most part, I do not put out price predictions on the internet unless I am extremely confident with them. So with that being said, I put another tweet out to you guys. This was on September 13th, letting you guys know that intraday scalp sell positions specifically, look at this, gold intraday scalp sell positions will be lit for the rest of the month of September. Weak equities and weak gold strengthen the DXY. Funny, it's like we tried to tell you all that the DXY wasn't done with the strength just yet. Be patient. Don't follow the hype. Follow the macro backdrop. Okay, so this is a tweet I put out to you guys. This was again on September 13th. Here it is right here. All right, and then just to timestamp this on where I put this out to you all on the charts, you guys can see that since then, gold has again depreciated in value. When I told you all sell positions would be the best opportunity for the rest of the month of September. Today is now September 27th, so you guys can see that I put this out to you all ahead of the curve. Now let's jump into the technicals on the lower time frame. So we'll jump down to the hourly, and I just want to show you guys how many opportunities you could have had to sell gold. Okay, again, if you don't know how to sell gold, or you're a new investor, or you've been paying attention to people on YouTube or Twitter telling you to buy gold, make sure that you pay attention. The devil's in the details. Technical analysis and the chart analytics do not lie if you know how to read price action properly. Naked charts, you don't need any indicators. You don't need any bullish moon boy Fibonacci numbers. You just need a proper sound technical analysis approach. Okay. And so with that being said, showing you guys where I put that tweet out at a high, letting you all know that for the month of September, sell positions were going to be the best opportunity, right? For the month of September, you guys can see since I put that tweet out during New York session, specifically because we're New York session traders, I'll go ahead and switch to New York session. You guys can see that since every single New York session that we put that tweet out, there has been multiple sell opportunities. So there's been 1, 2, 3, 4, 5, 6 now sell opportunities on gold for the month of September for every single New York session since we put that tweet out. All right. So go ahead and smash that thumbs up button again, ladies and gentlemen. Now to give you guys my overview on where I think gold is. If you are a gold investor, where I would be accumulating price action on gold or buying in at gold. Again, nothing that we constitute here is financial advice. This is just what I'm doing personally to hedge against the potential depreciation of the United States dollar. I've mentioned to you guys on this YouTube for quite some time that in the next 2 to 3 years, ladies and gentlemen, we are going to see the worst economic fallout of the United States economy that we have seen in history this far. It is going to be worse than the 1998 and the 2008 crash combined. Mark my words. Save this voice display in this YouTube video. Again, it is going to be the biggest economic fallout that the United States economy has ever seen. It's going to be massive, ladies and gentlemen. I hope that you are prepared. Okay. So with that being said, if one of the ways that you are preparing for that is, potentially dollar cost averaging in on gold, For me, I do not buy gold unless it is below $1,650. So with that being said, now during New York session, I will be looking at intraday trading positions to take some buys on gold. All right. Now, also to the downside, personally, I mentioned to you guys at the beginning of this video, I think that $1,490 is the lowest that gold could potentially go during this market cycle before we flip back to the upside. I could be wrong on that. That's just where I'm looking for gold to potentially fall into. Maybe sometime in 2023 or maybe towards the end of this year. Who knows? I definitely think, in my personal opinion, again, not financial advice, that a black swan event is coming. Regardless if it's some type of major nuclear scare, you guys can already see the nuclear news articles cooking up in the headlines, okay, which we mentioned on this Twitter page well in advance, maybe like 2 or 3 months ago. We've been calling those headlines out. All right. So these are all things just to be mindful of. I'm now in accumulation mode underneath of $1,650 on gold. So this is my accumulation box during New York session. I'm not just going to sit here and randomly pick areas to dollar cost average in. No. I will utilize the CYPRX strategy during New York session to go in and look for buying opportunities on gold. Okay. As long as price is below $1,650. That's just me personally. I've been accumulating gold since like 2017. Personally, I've been an investor in the market since 2016, 2017. And that is when I first started to develop a portfolio for gold. All right. Excuse me. All right. With that all being said, let's jump over to GBP JPY. This is probably the biggest call out ahead of time that we have ever made on our Twitter page. And I'm going to go into extreme detail. This is massive. You all need to pay attention. So I got a massive insider alert from one of my friends that works at a banking institution. And we see right here where I tweeted this out to you guys, September 22nd. This is roughly around when the Bank of England was going to be announcing interest rates and things of that nature. We obviously saw them only hike rates 50 BPS. With that being said, that was below expectation of the market. The market was expecting a 75 basis point rate hike. However, they got outvoted for that 75 basis point rate hike. With that being said, that was one of the reasons why we saw a massive depreciation in the Great British Pound. I'm going to go over another fundamental reason why the Great British Pound kind of tanked. But we see here, I tweeted out, PEEP, GBP, JPY, move of a lifetime inbound. You have been warned. Higher volatility equals higher rewards. Trade at your own risk. T-minus 1 hour insider alert. CYPRX confluences, which we will go over in 1 second. And I said to you guys, time efficiency plus manipulation plus structure equals profits. All eyes on the Bank of England. All right. And you guys can see roughly right at the top prior to New York session, where I tweeted that out to you all, you guys can see if I go to the higher time frame that the British pound against the Japanese yen completely tanked. Like I told you all, move of a lifetime. Had you have been selling the Great British Pound here when I tweeted that out to you guys roughly at this high, you guys can see that we tanked over 1,000 pips. That is insane. One of the biggest call outs that we've ever made on CYPRX. Okay. So over 1,000 pips to the downside. Like I said, move of a lifetime. Calling it out to you all ahead of the curve. Let's just go over some fundamentals real fast for anybody that does trade Forex or is interested in the Great British Pound and what's going on with the economy right now. We see breaking Bank of England hikes policy rate by 50 BPS, right? So I already told you guys, we got that vote. Again, right here, we see MPC votes 5-4 to raise bank rates to 2.25%. So that was just something very interesting. And you guys can see the date. This was on 9/22, so September 2nd, 2022, roughly around the same time that we had tweeted that out to you guys that there was going to be a massive move to the downside. Okay. Coming over here, another interesting fundamental article, just for anybody that wants to stay up to date. We see reactions. Britain's pound crumbles to record lows and fire sale of UK assets. Look at the date though. Okay. This was after we put out a warning to everybody on September 22nd. This article came out on September 26th. So again, if you want little tiny subtle hints and updates, follow us on Twitter. But we see this article reads, Britain's pound plunged to record lows on Monday and bonds were slammed for a second day as investors punished UK assets after the government's mini budget announcement last week. On Friday, Finance Minister Kwasa announced he was scraping the country's top rate of income tax and canceled a planned rise in corporate taxes on top of a hugely expensive plan to subsidize energy bills for households and businesses. The British government bond yields ripped higher in response, rising by the most in a single day in decades on Friday as investors ditched gilts, while London-listed blue chips hit their lowest since early March. right? In Asia trading on Monday, the pound fell by as much as 5% against the United States dollar, at one point at a low of $1.03, its weakest at least since the introduction and decimalization in the early 1970s. That is massive, ladies and gentlemen. So with that being said, again, insider alerts, we called that out to you guys well in advance. Let's go over the technical analysis on the lower time frame, because I said to you guys, remember, time efficiency plus manipulation plus structure equals profit. So let's jump down to the lower time frame, and I'm going to show you guys how you could have utilized the CYPRX strategy to catch this move when we called this tweet out to you guys. Alrighty, so we're jumping down to the 15-minute time frame. For anybody that enjoys these technical analysis breakdowns, we do ask that you smash that thumbs up button and make sure that you are subscribed to the YouTube channel. It does help boost the YouTube algorithm, ladies and gentlemen. All right, so paying attention to what it is that I said, time efficiency plus manipulation plus structure, you guys can see that this is roughly when that BOE rate hike came out, okay, during the London session. Okay. With that being said, you all see that prior to this New York session, when I tweeted this all out to you, you all can see that there was trend line manipulation. So there was people selling above these highs in the prior sessions. We know that the banking institutions, based off of what I've taught you all on this YouTube channel, they attack trend line liquidity before they make their major move. So with that being said, we have time efficiency. So we have where the Bank of England was going to be announcing those interest rates, all roughly here in this area. And then we have manipulation, okay? That comes in the form of trendline liquidity above highs. You all can see that right before the market makers made their major move to the downside, what did they do? They enticed buyers in the market by making people think that the market was going to move higher, right? So you all can see this spike in volume. But what were the market makers doing? They were coming to collect all the orders from people that were putting sell pressure in the market, selling at highs from this trend line. Okay. With that being said, the market makers came to collect all the stop losses from people that were trying and attempting to sell prematurely, right? Paying thousands of dollars for mentorship programs that teach you to sell at the top of trend lines, sell here, sell here, sell here, following some imaginary rule in the market that doesn't actually exist. The market makers break all of the stop losses above these highs. They collect up all those orders, and then they take their sell move, right? So now we can pay attention to the manipulation. The manipulation was the market makers coming to collect all those orders, faking people out like they're going to buy, and then taking their sell positions, right? With that being said, now we can pay attention to the third item I mentioned, which is structure, right? Structure is king. You do not need any fancy indicators that cost thousands of dollars or any winning strategy that's guaranteed to make you, 90% profit a month, whatever the heck. You guys just need to know how to understand structure properly. All right. With that being said, after the market makers collected all these orders above highs, what happened next? It's a logical explanation in the market that you need. So you ask yourself, well, the market makers did what? They grabbed and scooped liquidity above highs, and then they sold price action, breaking a previous market structure low. So now we see bearish order flow. Bearish order flow is when the market creates a high, then it creates a low or a new low previous to the market structure low that came before it. So if we're tracking structure right now, ladies and gentlemen, it would look like this. Here was a low, orders were collected above previous highs, and then a new market structure low was created. So this is the market makers showing us the willingness to scoop up orders from highs and make new lows. With that being said, they have no interest in pushing price above these levels. Okay. So with that being said, we have to have a bearish mindset, right? Respecting bearish order flow, because the market is showing us a willingness to collect orders above highs, break previous market structure lows, and create new lows. We have to assume that until this market structure high is violated with a brand new high in the market and a brand new higher low in the market that holds from the market structure low previously that broke this market structure high, we are going to respect bearish order flow. Why? Because if this happened in the market, that would be bullish order flow. So the only thing that would invalidate the bearish thesis that was just printed, which is the market structure collecting orders from highs and making new lows, would be what? A break of this market structure to the upside. That would be the only thing that would shift our mindset logically. Why? Because we would need to see the market break a previous market structure high, creating a new high. And then we would need to see the market maintain a higher low, respecting the definition of bullish order flow, then start to lead to a potential higher high, right? Coming up here in this area. Well, we failed to get that, ladies and gentlemen. So again, pay attention to structure. This market structure low was broken with a new market structure low being created in the market. All you needed to do was determine where potential premium was going to be at, taking your Fibonacci from the high to the low. You could have seen that the market makers pushed into 50% premium. Again, I'll just show you all that right now. We see from the high down to the low. You guys can see the market makers tapped into 50% premium, exactly from where the banking institutional giants sold from London session. And you all can see that the market makers during New York sold price action. They dumped the market. Okay. So I told you guys way ahead of time, T-minus 1 hour, right when I tweeted that out to you guys can almost see, right, from when I tweeted that out to when they dumped the market, that was roughly about an hour. I tweeted that out to you guys at roughly, let's say 2 o'clock in the morning. And then about an hour later at 3:30, 4 o'clock in the morning, they dumped the market. So I tried to give you guys even a time. I said, trade at your own risk, T-minus 1 hour insider alert. All right. So giving you guys a full technical analysis breakdown, showing you guys how we have insider information here at CYPRX and how accurate we are. I even told you guys the move of a lifetime. Had you have sold utilizing the CYPRX confluences, trading against retail, trading with structure, trading outside the manipulation windows, you could have caught a beautiful sell position on GBP/JPY that would have resulted in over 1,000 pips. I told you guys, move of a lifetime. Okay. Called well in advance. So if you guys, again, enjoyed that technical analysis breakdown on GBP/JPY, go ahead and smash that thumbs up button. Where do I think that the market could potentially go in the future? Personally, I think that we are going to just enter this kind of like accumulation mode. We're going to be waiting for the month of October to kind of play out. And we're going to be waiting to see if they do reverse the monetary policy sometime in November. As you guys can see right here, we see an article that says Bank of England's pill sees significant move, but only in November. So this is something that we're going to be waiting for. The next Bank of England rate hike, it says right here, the Bank of England is likely to deliver a significant policy response to finance minister's quasi-huge tax cuts, but it should wait until its next scheduled meeting in November before making its move. So with that being said, I definitely see maybe potentially that being priced in. If we do hear rumors of a 75 to maybe 100 basis point rate hike for the Bank of England, we could see the market start to accumulate here in this area, just bouncing up and down roughly between, let's say, 160 and 148, where we just bottomed out at. And then sometime in November, seeing a move back to the upside if we do see that 75 to 100 basis point rate hike and policy reversal from the Bank of England. All right. I know that that's all a mouthful. Moving on to the technical analysis for XRP. All right. If this is what you guys have been waiting for, again, smash that thumbs up button. We do appreciate the love and the support here at CYPRX, showing you guys that not only in commodities, not even only in crypto, but also forex, we give you guys call outs well in advance. So here we see a call out that I made on August 12th, 2022. I said, for all of you optimists out there, if 45 cents breaks with a sustainable bullish momentum, we should see a bullish squeeze up into 54 to 60 cents, fluctuating into May highs. Taking your attention over to the XRP charts and to give you an updated analysis on what I think is going to happen in the near short-term future with XRP heading into the rest of this year. Here is my price evaluation on that market, right? So you guys can see where I put that tweet out to you guys, and you guys can see that we did have that squeeze up into roughly 54 cents. The market actually squeezed up into almost 56 cents on some exchanges. It did hit 56 cents. That was absolutely phenomenal. But what we did not get is a new market structure high on the daily. Okay, so you guys can see that these candlestick closes did not close above the previous market structure high from the beginning of May. For me personally, that is sketchy. I told you guys that I'm not overall bullish. I'm talking about like full on. I believe that the bottom is in until we break these May highs. And the May highs roughly come in at around 60 to 65 cents, this red area. For me personally, to fully believe that the bottom is in and we are going to see a new altcoin rally, number one, we need to see DXY strength appreciate, which is not happening anytime soon. Okay. We also need to see, and if it does happen soon, personally, I think it's only going to be temporary. I think 2023 and their agenda is not complete. I think that the market is going to get way worse next year before it gets better. Again, telling you guys not to chase these bullish moon boy hypists, really understand the macro perspective and how messed up the economy is right now and what's going on globally. We have wars going on. We have nuclear scares going on. With that being said, that is going to drive demand temporarily, not permanently, temporarily, for the United States dollar because it is right now a safe haven asset. It is the global reserve currency at the moment. So when there's all this political uncertainty and economic uncertainty in the market, people are going to seek refuge in the United States dollar. And until that sentiment goes away, we're not going to see an alt season. I'm standing by that bias. Okay. So with that being said, some technicals to pay attention to. If we do see the market flip bullish temporarily on XRP, my next target is 60 cents. I have that marked off for you guys. If not, we could see a potential pullback down into 40 cents. For me personally, we would need to see the market hold that 40-cent psychological level. So I'll go ahead and put that on for you guys for a later breakdown. 40 cents. If we break that 40-cent psychological level, then most likely we are going to see a depreciation back down to that 32-cent psych level. Remember, 32 cents, guys and gals, is something that I've been calling out for quite some time. I am in heavy accumulation mode below 32 cents on XRP for my long-term bags. Any price action above 32 cents on XRP, I am switching back to my intraday trading and scalping position portfolio, meaning that I'm only looking for positions during the New York session. At any given time, that 32-cent psychological level threshold breaks and we do see a move to the downside. I still have buy limits set that I will never get rid of at 25 cents, 17 cents, and 13 cents on XRP. That is worst case scenario for me personally. It's better to be prepared and understand that that is a possibility of something happening rather than, sit here and deny it and act like it's not possible. Okay. Remember, anything is possible in this market. Nobody knows the future except for, but anyways, just to show you guys, right, how accurate we've been. We have gold callouts. We have GBP, JPY callouts. We have XRP callouts ahead of the curve. If anybody's interested in learning how we do this via technical analysis, again, link is in the description down below, CYPRX.teachable.com. We're not here to scam anybody. We're here to really teach people in-depth technical analysis, from a beginner's perspective all the way to an advanced perspective, 7 years of information and knowledge in this market, over 60 hours of course material, really here to lead people and steer people in the right direction. I hope that showing you all this content, it's putting our money where our mouth is at, showing you all that we know what we're talking about via technical analysis to the upside. Okay. I want you all to be mindful. If we ever do break that 60-cent psychological level, I think personally that we are going to see a squeeze. If we do see a break above that 60-cent psychological threshold and we see XRP make a sustainable higher low above that 60 cents, we are going to come and squeeze up into the liquidity above this equal high area. I've been eyeing this for quite some time, where if we do see a bullish scenario play out on XRP, my first initial intraday targets, especially if we do not see a drop below 32 cents and I don't get to add any more long-term positions on XRP, is immediately going to be take profit areas at these double top formations, okay? And that roughly comes in at around 90 cents, okay, where we most likely are going to see a squeeze into $1 if we break above 60 cents to come and collect the sell pressure and the sell orders that rest in the form of leverage traders who sold a double top retail pattern from this area, who are still technically right now in profit. Okay. So people 110% are still believing that the market's going to drop lower. That means that they most likely either still have their open stop losses above these highs or their orders move to break even. So that means that eventually the market makers are going to need to come back and collect these orders. Now, I'm not going to sit here and say when that's going to be. I'm just saying that if we do have a technical break above 60 cents with a bullish sustainable hold and a higher low above, then that 90-cent threshold is most likely where we're going to see the market squeeze into for the market makers to collect those orders. I will give you guys a price evaluation if that does take place. For now, I do see a pullback happening on XRP temporarily. We have seen some United States dollar strength pick up. This past recent market pump was most likely due to all of the bullish fundamentals surrounding the SEC case and things of that nature. Brad Garlinghouse appearing on all the news channels and whatnot. So with that being said, I hope that you guys enjoyed those realistic targets on XRP. You guys know that I'm a firm believer that sometime in the future, anywhere between now and 2030, we are going to see a significant raise in the valuation of price on XRP. I'm not going to sit here and tell you guys that I think that that's going to be $1,000. You guys can draft your own personal bias. I know how I'm situating myself on the right side of the market. If you all want to learn a sound technical analysis approach to the market, how to dollar cost average in properly, not just buying in at random spots because your favorite moon boy drew a Fibonacci sequence on his charts. Again, that link is in the description down below. I'd love to hop on a call with you guys and jump on a video chat. reach out to me via the customer support email that is also in a link below. Smash that thumbs up button if you guys like these price predictions. We gave gold call outs. Again, I think that gold potentially in the future, 2023, could go lower before it goes higher. I am in gold accumulation mode below $1,650 on gold. With GBP/JPY, sometime in the next couple of weeks, I'm seeing accumulation for the short term and then potential move to the upside towards the end of this year, right? Coming into 2023, maybe a potential policy reversal where we do see that rate hike from the Bank of England that could boost the market sentiment for the Great British Pound temporarily. With XRP, ladies and gentlemen, again, short-term price predictions, a potential pullback, sustainable hold above 40 cents. We could see a market squeeze up into 60 cents. If at any point in time we break that 40-cent psychological threshold, 32 cents is my next bearish target. Above these two levels and above 60 cents, we have 85 to 90 cents to a potential dollar. So be mindful of that. Set yourself alerts and alarms. Blessings to you guys. I hope that you guys enjoy this technical analysis breakdown. And I hope that everybody has an amazing week. Lots of amazing content coming out for you guys. Smash that thumbs up button. Subscribe to the YouTube channel. We do appreciate it. And as always, be cognizant, be aware, and I will see you guys in the next YouTube video breakdown.
Won't stop till I hear him say